欢迎收看《顶级投资人》，本期嘉宾是瑞士百达集团管理合伙人 Laurent Ramsey， 他有一个中文名字雷勒人。瑞士百达是一家来自瑞士日内瓦、历史接近220年的私有合伙制企业，其4大主要业务是财富管理、资产管理、另类投资和相关的资产服务。截止2024年6月30号，其管理和托管的资产规模达到了6940亿美元，是欧洲领先的独立财富和资产管理公司之一。瑞士百达目前由7位合伙人共同拥有和管理旗下的所有业务。Laurent 从业超过30年，目前是百达这7位管理合伙人之一。临近2024年年底，很多投资人关心的事件，比如美国总统选举、中国经济政策的转向，都已经尘埃落定，但他们对市场的影响却可能刚刚开始。所以我们的采访就从这些事件开始聊起。Hello, Laurent, and
Hi,
first of all, tell me what's the purpose of the trip?
The purpose of this trip, the main purpose of this trip here in Shanghai is to open our exhibition here in this very iconic hotel, the Peace Hotel. Actually, Pictet has launched a photography prize based on environmental sustainability to try to raise awareness on the issue linked to the environment by harnessing the power of photography. And today it is the largest sustainability photography prize in the world.
After the US presidential election, and we see the market reacted very strongly to Trump's victory. The question is, how much further do you think the so-called Trump trade can go?
Yeah, that's a good question. It's true that both the US dollar and the US equity market have performed very well. And if we look at past US elections, typically market performance and asset prices have started to calm down a few months after, so we can expect the rally to continue a bit. And eventually fundamentals are going to take over politics. So it will very much depend on what policies are actually implemented.
Should the investors hedge now or at risk now?
So listen, what we've seen is that following the demise of the market in 2022, investors have piled in cash. So we've seen huge inflows in money market funds. Both in 2023 and in 2024. Now, post-US elections, we see investors redeploying that cash because of a couple of things. First, obviously, the uncertainties leading to the election is behind us. Second, short-term rates are starting to come down, so the opportunity cost of staying in cash is going up. We see yield curve steepening. We see correlation between bonds and equities turning negative. We see the cost of leverage going down. We see M&A and IPOs gaining momentum again. So there are a lot of dynamics in the markets that are positive for clients to redeploy their cash into more risky assets. Now you have to do it in an intelligent way, and I think the name of the game looking forward is going to be to diversify your risk.
Back to Trump.
But if I may add something as well.
Yes.
In periods of expected volatility to go up, in periods of high uncertainty, I think there are two things that investors need to keep in mind. One is you need to be nimble.
Yes.
So I think multi-asset strategies that can move relatively fast between asset classes is always good when volatility is high and the trend is not so clear.
Yeah.
Second, keep long-term as your investment objective. We are in the business of investing long-term savings.
Long-term means more than 4 years.
Yes, more than the Trump administration. I think if you are investing, for your old age, you need to always remember that your investment time horizon has to be long-term.
Yes.
I think one of the biggest challenges of the industry is the short-termism, and investors tend to buy high, sell low. So, when there's a storm, look out, look at the horizon.
Yes. Very impressive. Back to Trump. We both know that Trump is not a fan of ESG.
Yeah.
But ESG is part of DNA of Pictet.
Yeah.
How to respond to that?
Listen, I think that, ESG and sustainable investing has had some headwinds linked to policy or politics, linked to regulation, linked to performance as well. Yeah. So if I look at policy and politics, which is the point that you are addressing, we've seen countries coming out of their commitments. But what we need to remember is that the train has left the station. The energy transition is happening and is economically viable. We need to remember that solar and onshore wind production and cost is much cheaper
Now it's very cheap.
than most other ways of other energy sources. Second, it is less volatile because you have abundance of power through new energy sources, unlike oil and gas. Third, today, according to the last IEB reports, the new energy sectors are employing more people than oil and gas. So its contribution to the economy is massive. So there are some very strong forces at play that transcend policy and politics.
You mean the trend of sustainable development, of ESG, is something a 4-year presidency of the United States cannot change?
No. I fundamentally believe that no, it cannot change. I mean, the only question is the pace at which the transition is going to happen. I mean, look at China.
Yeah.
I think China is a magnificent example of a fast-paced transition.
Yes.
In 2023 alone, China has added 217 gigawatt of power from solar, right? In 2023 alone. This is almost twice as much as the entire US solar production capacity. Again, in 2023, China has invested 650 billion in the energy transition.
Yes.
Whether it is, again, in solar, in EVs, in storage, in the grid. This is twice as much as the whole of Europe. So, this gives me hope.
You're right. In terms of the world's green transition, China is now absolutely a leader in terms of policy, in terms of the money invested, in terms of especially the manufacturing power that we have. Mm-hmm. And from the perspective of the investors, what's the opportunities here in terms of ESG investing in China?
Listen, we think the opportunities are plentiful. China is leading in 80% of the sectors that are linked to the energy transition. So we think there's a magnificent opportunity here for investors to play both, China and the energy transition. Now, it has not yet materialized in strong investors' interest because I think that international investors are still a bit worried about China from a macro perspective. But as soon as the interest comes back, I think this is going to be a fantastic play.
Let's talk something about China. In terms of the growth outlook, is Trump a wild card to China's growth?
Yeah, I think it is. But on the other side, China and policymakers have the ammunition to counteract on US policies going forward. I think we've already seen in September and October massive stimulus, monetary and fiscal stimulus, and I think there is still some room to do more in case Trump goes ahead with 60% tariffs on Chinese imports. If we look at the Chinese equity market cap as a percentage of money supply, we're at a 20-year low. So that gives you an idea of the dry powder that still exists and the room that policymakers have to mitigate the impact of potential tariffs.